Good afternoon, everyone. My name is John Jimenod, EVP of Production here at Angel Oak Mortgage Solutions. Today, we're going to talk about everything cash out, from first liens, second liens, and how we can help you grow your business by tapping equity in people's homes today. So we're going to get started here in about a minute. I'll introduce our great subject matter experts and hope everyone's May is off to a great start. And early Mother's Day for all those mothers out there. Happy Mother's Day. We'll get started here in about 30 seconds. Everything we're going to do today is driven by our website. This is going to be recorded and this will be sent out before end of day tomorrow. But I just want to make sure everyone knows everything's being driven from angeloakms.com. Check out people still logging in. This should take about 45 minutes to an hour. So, and we're going to cover, everything cash out. We're going to cover some great tools we have, from a blended rate calculator to our quick quote and our marketing portal, which I think is the best marketing portal in origination business. So that's the order we're going to cover stuff in. People are still logging in. I'll give it about another 10 seconds and I'll introduce our panel. All right, let's get started here. Again, my name is John Jimenod, EVP of Production here at Angel Oak Mortgage Solutions. Hope everyone's having a great day. Today, we're going to talk about everything cash out. Everything's driven from our website. I want to introduce our two subject matter experts. Scott Grubel, please introduce yourself.
Good afternoon, everybody. I'm Scott Grubel, account executive here in Broward County, Florida, Fort Lauderdale area. Been with Angel Oak now coming up on 10 years in August. Background has always been in the non-QM, non-conventional space with close to 20 years experience overall. So happy to be here and looking forward to discussing our second lien products.
Yeah. And then also joining us, Oscar Ungo. Oscar, please introduce yourself.
Morning, everybody. My name is Oscar Ungo. I've been with Angel Oak for 8 years. I'm here in Miami, Florida, and excited to get started because we've got some great enhancements that are hot off the press.
Yeah, so again, my name is John Jimenod. So between Oscar, Scott, and myself, just at Angel Oak, we have 30 years of experience just at Angel Oak, not including what Scott mentioned, his additional 10 years in the non-agency, non-QM space. So let's get started. Again, this is being recorded. We'll get this out before end of day tomorrow. But before we jump into our programs, we're going to launch a poll question here. Who has originated a cash out, whether it's a first lien cash out or a second lien cash out, in the last 12 months? While that's going on, I'm definitely going to share some information here. 40%, and Oscar, you know these facts, and you're always great at throwing them out. 40% of the homeowners own their house outright. And then we've got about over $30 trillion worth of equity in homes today. So that equity is available to you. So we're hopefully going to help you. I know there's a little bit of a logjam in the housing market, but we can help you create your origination business. So, okay, someone's going to have to help me because it never pops up the poll.
Yeah, so this is interesting, John. We have, well, it's about 50-50 right now.
Yeah.
Yeses and nos in terms of how many have originated a cash out in the last 12 months, which is super interesting.
That is really interesting, Scott, because all we're hearing and seeing on the news are HELOCs, tap the equity in your house, second liens. Our business right now, Scott, is over 40% cash out refis.
That's right, and it's been consistently growing month over month.
Yeah, so I'm glad 50% have not. Hopefully, we're going to help you grow your business the rest of the year. And guys, this is immediate. So we're going to show you, like I said, a blended rate calculator, our quick quote tool, and then how to market yourself, whether it's for cash outs, HELOC seconds, closed end seconds on primary, second homes, and investment properties. So, all right. So we did our poll question. Scott, we're going to go to we're going to talk about our bank statement HELOC program. Let me move a few thing around here. Sorry. Oh, lost my mouse. Here we go. Sorry, guys. Again, this is live, so stuff like this happens.
So bank statement HELOC, this is obviously an extremely unique product, even in the non-QM space. We're proud to say we were the first to market with this product in the non-QM space. Obviously, everybody knows that there's home equity lines of credit available. What I like to call quote unquote conventional home equity lines of credit that are available to borrowers. A lot of borrowers go to their banks, and you as loan originators have access to a number of different lenders that offer them. However, the bank statement borrower that has always been the underserved borrower, and the bank statement program, which has always been the #1 program in the non-QM space, well, those borrowers are looking for home equity lines of credit as well. Those borrowers want to tap into the equity in their property as well. And one of the things we know from experience of years of lending to bank statement borrowers are these are the borrowers that typically and historically are buying the higher priced properties, the jumbo loans. It's usually your self-employed borrower or entrepreneur. And so we wanted to make sure that they had an opportunity to tap into their equity and be served as well. And that's how the bank statement home equity line of credit product was born. These loan amounts on the bank statement side go up to $750,000 for business bank statements, and they go up to $500,000 for personal bank statements. And if I'm not mistaken, correct me if I'm wrong, John, I believe our average loan amount for a bank statement HELOC right now is somewhere in the $300,000 to $400,000 range.
You're correct. Yep.
Okay, yeah. So just for a loan originator, you need to know that these are good size loans. We're not talking about your usual $100,000 home equity line of credit. We're talking about some pretty good size loans. And so we do these as second liens, and we also allow them as a first lien if the property happens to be free and clear. And we do these for primary, second homes, and investment properties, qualifying using the bank statement. So everything across the board can qualify. We do also do them as full doc as well. So if you have a W-2 borrower that needs to do HELOC, absolutely, we can accommodate them. But specifically this one, we're discussing the bank statement HELOC. We have no restrictions in how the funds can be used. So the borrower can tap into that equity, use it to invest in their business, use it to buy another investment property, use it to renovate their home, whatever the case may be, no restrictions whatsoever. Now, a couple of different options in terms of the terms of the loan. We have 3 different tiers here. You see a 15-year term that has a 3-year repay. A 20-year term has a 5-year draw followed by a 15-year repay, and then a 25-year term that has a 10-year draw followed by the 15-year repay. That one is a full doc only. For the bank statement programs, we're looking at the 15 and the 20, and the 20 is the most common. And basically the way that works is during the draw period for those first 3 years or 5 years, the borrower is going to make interest-only payments. And then they'll make fully amortized payments during the repayment phase of 12 years or 15 years, depending on which one they choose. The rates for our home equity lines of credit are based on the Wall Street Journal prime rate. Now, your borrower does lock in a margin up front, and their rate is basically the Wall Street Journal prime rate plus that margin. That's the rate that they're going to pay. But since it is based on the Wall Street Journal prime rate, as the Wall Street Journal prime rate adjusts, their payment will adjust. So if the prime rate continues to go down the way it was earlier this year, literally your borrower's payment will go down with the Wall Street Journal prime rate on a monthly basis. So that's important to know. From a credit score standpoint, we only require a 660 credit score to qualify for a bank statement HELOC, and we do go up to a 90% CLTV. So there's a lot of leverage there that your borrowers can tap into, being able to go up to that 90% CLTV. Obviously, that's higher than what you're going to see on a cash out refi. So again, guys, these, I can tell you from experience, the volume on these is increasing month over month because the self-employed community is becoming more and more aware of the fact that this product is available to them, and they don't have to stress about thinking that they have to use their tax returns to qualify to tap into the equity. There are tons of borrowers who are sitting on generational rates, even on bank statement loans that were originated years before, and they want access to the equity that they're sitting on, and this is the perfect way for them to do it. So what we've done here at Angel Oak is we've been actually proactive of going back to our database of existing loan officers and saying, hey, if you've originated a bank statement loan, a bank statement first mortgage for a borrower anytime in the last 4 or 5 years, you'd be doing yourself a disservice if you don't go back to those borrowers and just say, hey, just want to offer you, if you're interested in tapping into the equity in your property without touching that great first rate we have a product for you. It's the bank statement HELOC.
Yeah, Scott, you mentioned it. We were closing bank statement loans, during COVID, prior to COVID, and there were rates in the 5s and 6s for bank statement borrowers back then.
Yep.
And who, as a lender, we've been reaching out, as Scott mentioned, we've been reaching out to the originators that we did those loans with back then when we rolled out this bank statement law, when we rolled out this bank statement HELOC. And Oscar, you always talk about the stats, new business applications. I mean, go ahead if you want to throw some out right now. So,
I mean, new business applications skyrocketed in 2020. I haven't looked at the recent numbers, but I mean, if you just look 2 years ago, and you've got, especially here in South Florida, you've got thousands of new businesses that opened up that have now been in business for at least 2 years. This isn't just I guess I'm gonna skip ahead a little bit here, but this isn't just about seconds. We do offer less than 2 years in business down to 1 year on our bank statement program. And so if your client needs to tap into cash and they just want a standard cash out, that's also an opportunity for you. But go ahead.
Yeah, no, go ahead, Oscar. I'm sorry. Go ahead.
No,
So, but you talked about the new business applications. There's, from COVID, over 400,000 new business applications a month, right?
Yeah.
So it's almost 5 million a year. And the number one, I know you guys are in Florida, so this is a national call. So, but the number one state for new business applications is Florida. So California's second. I think Texas is third.
Texas.
So,
Yep.
yeah. So depending on where you are on this call, there's a lot of equity. Since 2019, the average home in the U.S. has appreciated almost 50%. So, so Scott or Oscar, anything else about the bank statement HELOC before we go into our standard closed-end second?
Yeah, just I'd mentioned that for those of you who have not originated a second with us or a second period, and maybe you haven't done a loan with us and you're considering getting set up with us so that you can start originating seconds and non-QM loans, just jump right in the pool. I always say we're going to be your lifeguard. Part of our process is making sure that you are comfortable submitting the loan with us because we believe in pre-qualifying, helping you pre-qualify your client. So some value that we add, especially here on our seconds, is that when you submit what's called that pre-qualification, we call it a quick qual. You're going to be doing it through our website. You actually don't need to be set up for this step. John's actually going to preview this further down the road. It's called our non-QM quick quote. All you need to do is, if you're going to be submitting a bank statement HELOC or bank statement closed in second, is collecting those bank statements, taking the application, running credit, and then sending that through our quick quote. And the value that we're going to add is at an ADC LTV or less with a loan amount of 400,000 or less, we're going to run an AVM for you. And that's going to be at no cost to your customer. It's on our dime. Okay. So what that means is that's instant savings for your customer. If they want to move forward with that lendable value, you won't have to order an appraisal. And that puts you in the driver's seat because you're not going to have to wait. That expense is gone down the road to wait and see what that value is, to see whether or not you're going to hit value to get the line amount that your customer wants, right? Yeah. So you'll know that instantly up front.
Yeah, Oscar, that's a huge benefit. I mean, that's and we were one of the first ones to roll that out also. So Scott, we don't get into it because we're really talking about second liens, but how are you calculating and who's calculating the income for the bank statement borrower on behalf of the originator?
Yeah, it's a perfect segue to piggyback on what Oscar just mentioned with the AVM, because on all of our bank statement loans, whether it's the HELOC or it's a first lien bank statement, we calculate the income for you, for the loan originator. As Oscar mentioned, we do pre-approvals on every single file that gets submitted to Angel Oak, meaning your account executive, Oscar, myself, we are reviewing your 1003, we are reviewing your credit report, and we're submitting your bank statements for an official income calculation. So we do that all up front. It's done within 24 hours. And now we know exactly what the income is that we're going to be utilizing to qualify this loan. When that loan gets submitted to underwriting, that is the income that the underwriter is using to qualify the loan. So when you couple that, where you're submitting a file where income is calculated already for you up front, that file has been reviewed by your account executive, credit's been checked, 1003's been checked. And in addition to that, we have an AVM, as Oscar mentioned, where we know exactly what the value is that we're utilizing for our CLTV. What happens is these loans are set up to fly through the system successfully. And we are typically closing these bank statement HELOCs in a very short period of time. So it's important. These loans fly through and we can get the cash in your borrower's hands quickly.
Yeah, great points, Scott. Oscar, great points. Again, if you have questions, put them in the question queue. We'll get to them. If we don't, we'll have your account executive reach out to you and answer your questions. These are just for residential loans. I think Michael was asking if this is for commercial. It's not. Angel Oak just does residential. So Oscar, let's talk about our closed-end second.
All right. So closed-end second, the key difference between a closed-end second, also called a HE loan, and a HELOC is that the closed-end second is a lump sum payment, right? So your client is getting a lump sum. Unlike the HELOC, they're not going to be able to draw and repay and redraw on their balance. Okay, so this is just a second loan that can be either locked in as a 30-year fixed, 20-year fixed, 15-year, or 10-year term. It's also not tied to the Wall Street Journal prime rate, so it won't be adjusting. Again, it is just an amortizing loan. Another key difference between this closed-end second and the HELOC is the minimum loan amount. On the HELOC, the minimum line amount is going to be $125,000, and your client can draw at a minimum $100,000. On the closed-end second, the minimum loan amount is $100,000. But the max loan amount are identical. We do still go up to 90 CLTV. If it's going to be a bank statement loan, we're going to follow the same process. Same goes for those full doc customers as well. Now, at the end of the day, we are seeing a lot more HELOCs, but it comes down to need. What does your customer need, right? So do they need the access to funds for a 5-year period? Are they going to be using, we have no, they can use the fund. There's no restriction, is what I should say, on how the funds are used for both the HELOC and the closed-end second. But, are they going to need access to funds the way that you would need access using a credit card? If that's the situation, then the HELOC is the best option. Some customers just prefer that one lump sum payment. We see, as Scott, I'm pretty sure Scott mentioned this earlier, we see a lot of borrowers tapping into these seconds so they can go buy more property. And then that's just a segue to another program that's called the Debt Service Coverage Ratio program, where we see a lot of borrowers using seconds to go buy investment properties. So that's just an opportunity for you and something you may want to start educating your realtor partners on. But at the end of the day, like I said, it really does come down to the need for the product.
Oscar, while you're talking about the closed-end second, I'm sorry, talk about the DSCR closed-end second, if you don't mind.
Well, we also offer a DSCR closed-end second. For those of you who have not done a DSCR loan, it is a no income, no employment investment property loan. There is no DTI. It is all based off of the property's cash flow, and how we determine the property's cash flow is by dividing the rent by the total housing payment. And on our DSCR closed-end second, the rent has to cover greater than 20% or 20% of the total housing payment. So more than 20% of the total housing payment. The minimum FICO score for this program is 700, and the max CLTV is 75%, with a max loan amount of $350,000 and a minimum of $100,000.
Yeah, so guys, Scott mentioned we do full doc bank statements, and now you have a DSCR, no income, no job information for a closed-end second. And I'm not predicting the future. I don't know anything, Scott or Oscar, so don't hold me to it. But I'm sure there might be a HELOC, a DSCR HELOC, and that's we just continue to evolve our programs, whether it's an AVM, to help you guys close loans faster and more efficiently. So one of the tools I wanted to get to and show here before we go into the first lien cash outs where you can get larger loan amounts. Let's talk about our blended rate calculator. So I'm going to go back to the home page, but I've already plugged in. I'm just going to show you where they are and then click over to a different tab. So we have a blended rate calculator. We have a DSCR loan calculator and a 2-to-1 buy down calculator. So I'm going to show right now just the blended rate calculator. And what I did is I did a little homework ahead of time. If you bought a home 10 years ago, that medium household was $300,000 price tag. So I put current value. As I mentioned earlier, most homes have increased 50%. Sorry, 500, I wish. I put in monthly insurance, taxes, HOA, what the loan amount would be right now on that first lien. I put in a rate of 3.5%, 30-year fixed. I put in our second mortgage loan amount of $200,000, a rate of 9.25% with a 20-year term. So guys, this is, Oscar, I don't know if you want to talk about the average credit card interest rate.
Yeah, actually, something to mention for sure. So average credit card interest rates are 27%. And John opened up the conversation by mentioning that 40% of homes in the US are free and clear, and Americans are sitting on 30 trillion in home equity. So you don't want to underestimate your client's need for cash. And we're saying it, we're experiencing a mini refi boom, and it's for this reason. Credit card balances are 1.8 trillion. And Americans are paying 120 billion in credit card interest rates as of 2022. Student loan balances are 1.6 trillion. Auto loan balances are 1.6 trillion. So
the economy's doing really well, but there's still a lot of debt out there, right?
Exactly. And we're seeing a lot of people tapping in and not touching their first and going for you absolutely want to use this blended rate calculator so that you can determine what is the best option for your client. Would it be refinancing at first based on this total payment, or would you want to go with a second? That's really what this is for, to just make that decision easy for you.
But you're looking at a blended rate calculator and someone getting $200,000 in hand, a blended rate calculator of 6.567. That's if you don't want to do anything with that money, put it in a high interest account that's earning 4%. Right. Mm-hmm. But you have that money available to you. And guys, this is how you can create your own mini refi boom, right? So this is how you can make money for the rest of the year. So, Scott, let's talk about, we've talked about our second liens, the bank statement, the full doc, the debt service coverage ratio. So let's talk about just our, standard front end bank statement cash out.
Yeah. And so, in addition to the second lien options we offer, one thing I want to mention on the second lien options is keep in mind, guys, that your borrowers don't know what they don't know. There's a lot of borrowers out there that need to tap into this equity, but they need that nudge. And so that's where I think an originator, it really will come in handy for originators to reach out to their database and say, hey guys, we have a product that can help you. You don't know who might be needing to tap into their equity, and they just don't know where to get started. And by reaching out to them and offering it to them, whether it's bank statements, full doc, or DSCR, you're giving them that nudge that they need to take action and be able to consolidate some of this debt. It's very important up front to have the conversation if you're looking at second liens with your borrower to what, Oscar's point earlier is, different needs for different people. Some people might need the home equity line of credit because they only need access to the funds short term for specific reasons. Others might want to consolidate high interest debt, get it paid off and out of their lives, or they might just need all of that cash in their hand to go purchase another property with, and they want to know exactly what their monthly payment is going to be. And for those borrowers, the closed-end second mortgage is the better option. So really think originators have to have that conversation with your borrowers when you're talking about how they want to tap into their equity, because it would be a different need for a different borrower. What I've seen in the market is a lot of loan originators immediately tend to just pivot to the home equity line of credit, the HELOC, because that's the popular term, when the closed-end second mortgage might make more sense for that borrower. In terms of first liens, though, we looked at that blended rate calculator. There are going to be times when you run those numbers where it may not make sense. And in that case, you might be better off just doing a straight first lien cash out refi for your borrower. And so we obviously offer the opportunity to do a cash out refinance on the bank statement program, on the full doc program, and on the DSCR. For the bank statement program, we're going to calculate and qualify and pre-qualify that loan exactly the way I mentioned earlier. We're going to review your credit, your 1003. We're going to run the income on the bank statements. We're going to know exactly what the income is that we can use right up front to qualify for the cash out refi. On a cash out refi, for the most part, we go up to 80% loan to value on a bank statement program, and pricing is very competitive today. We do have a lot of borrowers that may have purchased a property using bank statements only within, say, from 2022, right, middle to late of 2022, up until maybe 2025, when pricing was higher than what it is today. And so for those borrowers, it might benefit them to just do a straight cash out refi. The point is, there are options to provide your borrowers to help them tap into that equity and do what they need to do with that leverage.
Yeah, so Scott, we've done bank statement programs. The questions we get. Oscar mentioned it earlier. Is it how long have they been self-employed? So just kind of touch a little bit on some of that, Scott.
Yep. So typically your self-employed borrower in the conventional world or in your standard bank statement world, the borrower needs to be self-employed for 2 years. So if they own a business, they have to have that business open on Secretary of State website for 2 years. If they're a 1099, they need to be 1099 for 2 years. What makes Angel Oak unique, and Oscar alluded to this earlier, is that we have a niche program where we don't require 2 years of a business being open or 2 years of a borrower being a 1099. We can actually do it with 1 full year. As long as they've been in the same line of work for 2 years, with 1 full year, we can do a bank statement loan using business bank statements or personal bank statements for your business owner or your 1099 borrower. That's a unique niche product to Angel Oak, and it opens the door to a lot of borrowers, because I'm sure every LO on this call has been in that situation, right? You have the nurse who went from W-2 to 1099 and now they're traveling, or for whatever reason, a borrower, just their company changed them from W-2 to 1099 because it made more sense for them, right? There's a number of different reasons why it happens, but it happens, and it happens often. You have an individual who may have been in a line of work for the last 10 years and they decide, you know what, I'm going to go off on my own, I'm going to incorporate, right? So we have options for those borrowers as long as they have that 1 year of being 1099 or their business being open.
Yeah, and Oscar, you have the other side of the gig economy, right? Talk about a little bit about that. That person's W-2 doesn't want to give up that gig yet, and sorry.
Well, if are you referring to using 2 incomes?
Yeah, exactly.
Yeah. So you have plenty of times where you have a borrower who has their salary job, but they and that job is in a similar line of work. They've just started, their side hustle. They've had that side hustle for a year, and that scenario is a scenario that qualifies for this program now. I think I would say at least once a week, I get an email or a phone call. Hey, Oscar, I've got this is just another scenario similar to this. I have a client who was W-2 and is now 1099 by the same company. Is that something you can help with? And today the answer is yes. As long as they have a year as 1099 and then the prior experience for the last 2 years, we can do that loan.
Yeah, or your spouse is W-2 and the other spouse is self-employed. Yep. You can use both those incomes.
Yep. Or Social Security, VA, etc.
So Oscar, I'm going to ask you a question. You might have to look at your matrix, not a problem, but And I think Juan's asking this question, is the DSCR, and I think he's referring to the closed-end second because this question came in a little while ago. Is the DSCR second lien available on 3 to 4 units?
No, it's up to 2 units.
Yeah. But that's the other reason. So, but we're giving you options. The other reason you could do the first, right? And that's probably a perfect segue into our debt service coverage cash out. Oscar, you want to touch on that? Let's navigate the website here a little bit.
It's a tug of war between the bank statement program and the DSCR program on which one is my favorite. But, with our recent enhancements, I got to say that, we're just making the DSCR program even more bulletproof, as we always say. It is a nearly bulletproof program. We've just finished rolling out 80% cash out LTV. So that's a major enhancement. And for those of you who have done DSCR loans with us in the past and you just haven't in the last month, you can see it right on the screen. Third bullet point, 1007 waiver. So we are running an automated rental AVM report. The same way that we will run an AVM report on those seconds, we're going to run a rental AVM report when you submit your quick qual through our system. And again, for those of you that are not set up with Angel Oak, we invite you to submit any sort of DSCR scenario that you have through our quick qual at a 75 LTV for a 1-unit property. This rental AVM report will run when you submit the quick qual. Your AE will receive it, and then they're going to share that rent with you. What is the benefit of that? Well, on DSCR loans in the past, whenever you've been running whenever it's a purchase transaction, I mentioned suspense before, I'm going to mention it again. You would have to wait on the appraisal. You would have to wait on your market rent. And then you always have to have the conversation with your client on how the process works with DSCR loans and how the DSCR ratio impacts your LTV. But if it's a 75 LTV and the client wants to move forward with the market rent on the rental AVM, then you already know what your market rent is before you've even disclosed on the loan, meaning that isn't going to change from the moment you disclosed through funding, right? So you can submit that loan with confidence. So that is a major improvement. And you don't know, as Scott said, you don't know what you don't know, and you don't know that you need something until you do. This is huge. And I believe we are the only non-QM lender in the country that offers this. So it is at a benefit to you, putting you in the driver's seat on debt service coverage ratio loans, so that you have security through disclosing all the way through funding. It'll also save your client money on a 1007. So that's why we have 1007 waiver. If they want to move forward with that rental AVM, they do not need to order a 1007. You do need a full appraisal, but that's all.
Yeah, that was the unknown, right? You had to wait till that appraisal came back, and that was, be honest, this is our most popular program. So It's your favorite one, Oscar. So,
all right.
But that was the one that created a little bit of heartburn because you didn't know until you got the appraisal. But now you've got all these options up front. And Oscar, you always say this, you can increase your business really quick with this DSCR, and even quicker with the second liens, the HELOC, all those. If your business isn't where you want it to be for the first third of the year, this can change your trajectory and your income. Yeah.
Now, I went off course a bit. I talked about purchases because I do love that we are offering this for purchases. I do also want to mention that we offer it on refis. And I've got some added news. The highlight is that on a refi, we will use the higher of the 3. So for those of you that have not done a DSCR loan with Angel Oak, at 75 LTV, we're going to run this 1007 the automated rental AVM. Your client has the option to use their active lease on the property, or they can use the market rent on the 1007. So you have 3 options there, meaning that, again, it is a nearly bulletproof loan. You can use the higher of all 3 market rents for your DSCR ratio.
Yeah. And in 2 weeks, a shameless plug here. In 2 weeks, we're gonna we're going to do short-term rentals and dive deeper into DSCR. So, but today we just really wanted to talk about cash out, second liens, first liens, and really how you can not have to wait for a realtor to send you a referral. This is going back, as Scott mentioned earlier, this is just going back into your database and calling, previous customers over the last 5-6 years. God, this is newfound business for you if you weren't planning on it. And I know we're half past the hour, so Scott, let's talk about, Oscar's mentioned it a couple times, our quick quote. How do I get a pre-qual to you? Because again, as you mentioned, this is really unique in the non-QM space of the AE basically doing a pre-underwrite. So I'm going to go back to the homepage, Scotty, and take me through how, you can get a quick quote, and then how can they send you a pre-qual?
Absolutely. In my opinion, this is one of the easiest pricing engines you're going to see in the industry, definitely in the non-QM space. And the beauty of it is that you do not require credentials to access and log in. So as a loan originator, you can pull pricing on any one of our products and programs 24/7 at any time from any place. You can pull it directly from your phone as well. This is compatible with your mobile device. So if you simply click on this non-QM quick quote right on our homepage, that's going to bring you to our pricing engine, and you begin to just enter your data. So assuming you're a broker, we notify you that you can choose which program you want to get pricing on. So assuming we're pricing a HELOC, you'll click on your HELOC product, and then we're going to start entering the loan data. So in this case, John entered a $200,000 loan amount. Little important note on the HELOCs, your HELOC draw amount should be at least 80% of that loan amount in order to get pricing. You'll input all of the details, your LTV, CLTV, second lien, credit score. You can see how quick and easy this is to answer. You're just working left to right, left to right. Everything is a drop down, so you're just selecting your option. In this case, we'll go bank statements, 24 months business. We'll scroll down and select our comp type. And then we'll enter whatever the balance is on the first mortgage. And you can see that as soon as that's entered, the pricing is going to begin to populate on the right-hand side.
What did I think, hold on, let's change this to 0, see if that changes it. What did I miss, guys?
Let's take a look. You've got, it's a little difficult to see on my screen. You've got 275 second lien, 0 times 30, 760, primary, single family, Florida interest only, no.
Oh, I think this is what I did. I'm going to,
Oh,
there you go. So
there you go. And
I
there's
tried
the
making
price.
it too fast. It's my bad.
So you can see we're going to give you the entire pricing stack, so you can look at all of the different options for your borrower. At the very bottom, you'll see the pricing will increase down to your par rate, and then there's options in case your borrower wants to pay points to reduce that rate. As we mentioned, we're showing you the net rate to the borrower, but we're also showing you the margin on that loan. As mentioned earlier, it's Wall Street Journal prime rate plus this margin. And so, John, if you head back over to the left-hand side, this is interactive. It's dynamic. So if we wanted to say, well, let's see what this looks like at a 70% CLTV, John will just go into that field, adjust the LTV to 70, and as soon as he tabs out of that box, the pricing will adjust on the right-hand side. Okay. If he wanted to say, well, you know what, now that I see what this looks like for a HELOC, let me see the comparison to a closed-end second. Simply just click on the closed-end second box at the top. You'll notice all of the information will save. And if there's any new information that needs to be entered, it'll ask you for it. In this case, it was not needed. And you'll see that the pricing automatically adjusted to show you now closed-end second rates. And again, these are fixed rates. So you'll see this stack looks a little bit more like what you're used to seeing on a pricing stack for a first mortgage. It's literally that simple, guys. It's as simple as clicking your drop downs, clicking your toggles, and you can sit here and look at a bunch of different options for your borrower live with them if necessary.
Yeah, Scott, it's really simple, and it's just a matter of, like anything, just using it, right? Using it and running scenarios. So, Scott, if I wanted to if I have the 1003, I have the credit. and I want
Yep.
you to, we'll just use the closed-end second here, and I want to click on, just a par rate, anything close to par. I click on that. Am I locking that loan?
Absolutely not. This is simply a rate has to be selected so we know how to run your pre-approval in terms of a DTI. So we're going to utilize that rate as a qualifying rate for the pre-approval when we run your debt to income ratio, but you're not locking anything. Now you'll notice that we're going to ask you to input the subject property address. Nothing is being triggered here. There's no disclosures or any regulation trade. Nothing's being triggered. We're asking you for the address so we can run that AVM that we mentioned earlier. That this address is going to allow us to run the AVM so that instantly we'll know exactly what the value is that we can use for this property when we're doing your home equity line of credit, and therefore we won't need to order an appraisal. So you'll enter the property details there. The loan originator will enter their account executive's name, their personal information, company, NMLS ID, etc. And then you'll see at the bottom, you can drag and drop your 1003, your credit report, and your bank statements and submit this. And what happens is as soon as this is submitted, the bank statements instantly get put into the income calculation software so that the income calculation can be run, and your account executive is receiving a notification that this pre-approval request was submitted by John. So now we're going to take action to go into that pre-approval request, take a look at it, prepare it, wait for that income to be calculated, which is usually pretty quick. And then usually the same day, within 24 hours, we can run that pre-approval, input the income, look at the credit, and issue you our pre-approval. Now, I always like to phrase it as, think of our pre-approval, guys, as your DU approved eligible, right? It's going to show you pricing. It's going to show you terms. It's going to show you findings. It'll show you all of your passes. It is our version of that DU approved eligible. You can now take that pre-approval and confidently submit your loan to underwriting, knowing that unless something pops up that is out of your control or our control and nobody could see, you're probably going to get that loan approved when you submit it to underwriting.
Scotty and Oscar, so we're talking about second liens, right? Running the AVM, but do you guys do pre-quals for TBDs?
Yes, we do.
Yeah. So
absolutely.
And again, the same work goes into the 1003, the credit report, and the bank statements. And if it's a DSCR, we just want the 1003 and the credit report. I mean, they're basically pre-underwriting that file. Like Scott said, it's your DU LP, and this will follow, that income will follow that through underwriting. And if Scott or Oscar or any of our other account executives across the country, if they need an exception, they get that exception at the pre-qual stage. Mm-hmm. It's not like, hey, send it in, we'll see if it works, right? Our underwriters don't need practice underwriting files that aren't going to close. So, and that's all done up front. So we understand your referral relationships if it's a purchase, right? We understand your referral relationship if it's a refi, cash out. So we understand some people might need that cash soon and badly. So Oscar and Scott are going to pre-approve that.
Yeah, surety of execution is a term we use a lot here at Angel Oak, because we want to make sure that we're putting you as the loan originator in the best position to succeed when we send you back a pre-approval. And we pride ourselves on that. It's one of the reasons why I'll boldly say we have the highest conversion rates in the non-QM space of any other wholesale lender. We're close to 80% conversion rates of loans that get submitted to underwriting that actually close. It's because of this process. It's because we're reviewing your credit, we're reviewing your 1003, we're reviewing your income, and we're vetting out any potential issues right up front before that loan gets submitted to underwriting.
Yeah, so it's critical, and we take great pride in it. I mean, I know I do, I know you guys do, and everyone else does too. So, all right, so Scott mentioned it earlier. Serving underserved borrowers, right? It's on our website. We're going to tell you how you can market yourself. Not tell you. We're going to show you how you can market yourself to these underserved borrowers, and it's really, really easy. So, Oscar, take me through how to get to our marketing portal.
Well, for this step, you will need login credentials, unlike the quick quote. So if you want to get set up with us and you haven't, or you just don't have login credentials, go ahead and send us your information in the chat, and we'll make sure that your account executive gets in touch with you after this call. To log into the marketing portal, all I have to do is click on broker login at the top. And then click here to log in. Just a pro tip, if you're not going to want to click on internal user, that is meant for anybody that works with Angel Oak. And when you get set up with a password, you're going to receive an email really quickly with your temporary password. Your username is going to be your email address, and then you want to log in with that temporary password and reset your password so that it doesn't expire and you can log in again. To get to the marketing portal, it's right there at the very top. All you have to do is hover over that cascading menu, and you'll see all the options that we offer. Let's start with the flyers. Those are super simple to put together. You do not need to download the flyer and then go to Adobe or Photoshop and start editing any information. It's all customizable directly on our website. All you need to do is choose the flyer, the transaction type that you want to market. When you click on it, it'll auto-populate all the fields to the left-hand side, and then you just need to fill in your information. And you can also add your photo and your logo there to the left. We've also seen loan originators just market with their realtors as well. So you can co-brand with a realtor and add all your information to any single one of these flyers.
So Oscar, I went in and pre-populated one with my contact information on here, and I had not done this I was telling Scotty earlier, I hadn't done this in a half a decade, and it took me less than 3 minutes to do this.
It's so easy to use, and you're not going to have to do it again every time for every flyer. All you have to do is click at the top, change the flyer that you want, and it'll auto-populate again onto that flyer. And then just to download it, you just click download and the place that you want to save it directly to your desktop.
I thought you were going to say it's so easy, even I could do it. But
Oh, it is.
all right, let's talk about social media posts here.
So the social media posts, the great thing about these, we have flyers for every single, or I should say content for every single social media outlet that you would want to use. Let's start with LinkedIn. There's also Instagram. Again, they're already done, so you don't have to change any dimensions. The dimensions are meant for you to post on whether it's Instagram or Pinterest. And another great thing is that we've also added captions. So the captions there at the bottom, you don't have to reinvent the wheel. If you're going to be targeting borrowers, then you have captions for borrowers, and if it's meant for realtors, and then we've also pre-written those for you too, just to give you, some direction.
Yeah, Oscar, it's amazing. I think between the flyers, I think there's 20-something flyers and all these different social media posts for platforms. You could create your own marketing campaign for probably close to a year, doing one every week.
Yeah.
It's and I get a list where I get on my soapbox a little bit. We talked about cash out. We even have them, like you said, for Facebook and LinkedIn. This is where I get on my soapbox a little bit. Take advantage of this. Oscar, what does it cost to use this marketing portal?
Nothing.
I'm sorry, what was that? No.
Nothing. Absolutely. It's zero.
Yeah. And then we have these whiteboard videos. They're not labeled with Angel Oak on them at all. And none of these social media posts have anything about Angel Oak.
Nothing.
Neither do the flyers.
It's all unbranded.
Yep. So let's talk about probably the most powerful presentation that your account executive could do for you, or if you're experienced enough in non-QM, do for yourself.
So this is something that I know that Scott and I do very often. And for those of you who have not requested this, I do recommend that you reach out to us if you want to set up a presentation with your referral partners. They're really exciting presentations. The Q&A always runs on, so we block out a good amount of time for them. But this realtor presentation is already done for you. Again, it is completely unbranded. It's to teach your referral partners how they can promote you business so they can send you more borrowers to get pre-qualified and pre-approved. we have access to plenty of tools like GoToMeeting and Zoom, Microsoft Teams. So if you would rather do something completely online, we can set that up for you if you don't have access to any one of those. Or we can also do, for those of you that are local with us, we do in-person presentations as well.
Yeah, I know, Scott, you do a lot of this. Give an example, Scott, one of your brokers, how he combined this realtor presentation along with other programs that Angel Oak doesn't do.
Yeah, so the beauty is that the presentation, the slide, the deck, it's a Microsoft PowerPoint and it's 100% fully customizable, totally white label. So what a few of my accounts did is they customized it to their logo, to their color scheme, and then they added some pages to promote other products that they offer on the conventional side, down payment assistance, and so on. And so they were able to put this full, comprehensive, full spectrum presentation together that highlights non-QM, and then they're able to kind of speak about some of the other unique products and programs that they offer. And they shared this throughout the entire company so that every loan originator has access to it, and everybody was able to go out there and do a presentation, whether it's Zoom, virtually, or in person. As Oscar mentioned, as AEs, we love to go out there on behalf of our loan originators and do the presentation with them as their investor, one of their investors, their whatever they want to call us. We come out, we discuss the non-QM portion of this in a little bit more detail. We're able to answer a lot of questions for the realtors. It's a great way to get your foot in the door with realtors, to get a group of them in a room and do a presentation. They're used to hearing about Fannie, Freddie, DPA, et cetera, but it piques their interest when you come in talking about a bank statement loan or a DSCR loan or an asset qualifier program or an interest only or non-warrantable condos. Those are things that pique realtors' interest. And so it's a great way to get them in the room, and then you can present to them any information you'd like.
Yeah, Scotty, it's, we don't say, again, like the flyers and the social media, the AE goes in there and does not say anything about Angel Oak. It's all about, we had a question from Michael. I would say if Michael's the originator, I would go in there and present. If you find a self-employed borrower, what are you going to do? You're going to refer them to Michael, right? I'm not saying anything about Angel Oak. So it's a very, very powerful presentation. If you get 12 to 13 realtors in a room, the odds are you're going to get one of their loans, one of their personal loans.
Yeah, so. and it never gets old. So it doesn't. This is all about networking, and I know that myself and Scott have presented with our clients that have set up meetings with the same real estate offices. Right? It is the same crowd. The difference is that we are now coming out with new enhancements, and it's just continuing education. Today the conversation's about the next niche, the next enhancement. So 1 year in business for those self-employed borrowers on bank statement loans and 1099 loans. The recent enhancement on our P&L program, how they can network with their investors on how to tap into their equity to go buy more investment properties. So the conversations are always changing and they're always productive, and we always come out winning with at least a loan.
Yeah, if 50% of the poll did not close a cash out, or let's say even a non-QM loan, I mean, this is a huge, huge, huge opportunity. So anyway, I think we've gotten through all the questions. Scott, Oscar, I'll start with you. Anything in closing?
In closing today, I think we've nailed it today. We've covered everything.
Wow.
For those 50% that have not originated a cash out in the last 12 months, if you want follow-up, we talked about realtor presentations, but if you want a follow-up call with your account executive and do some continuing education, I promise you, we can just dial into any single program that you want. And within 15 to 20 minutes, you will be an expert on either the HELOC, DSCR, bank statement, you choose. And we'll set up that conversation. It is not something that's outside of what we do. It is part of our job. So please don't hesitate to give us a call and schedule a meeting with us.
And Scotty.
Yeah, I think one of the keys to success in this industry for loan originator is to kind of just be able to stay ahead of the curve and see where the ball is going, right? And the fact of the matter is all of the data shows that a cash out market is here and it's coming and it's going to continue to grow. We have some turmoil in the Middle East. We expect that to settle down eventually. Prior to that, though, if you really look at where rates were headed, they were on the way down. And there's no reason to believe why that's not going to continue once this turmoil is settled. And so get ahead of the curve. Get in front of your borrowers, your existing database. Continue to market your purchases, but definitely get ahead of the curve and go to your existing database and offer them these options for cash out. They're easy loans to get done. They add value to your customers. And if you don't do them, another loan originator is. So get ahead of the game because there's massive opportunity for you. And as you can see from today's presentations, there's plenty of options available for you to be able to accommodate your borrower.
Yeah, thank you, Scott. Thank you, Oscar, for obviously your expertise and giving up your time here. So on behalf of everyone at Angel Oak, thank you for attending. Again, this is recorded. We will get this out to you before end of day tomorrow. And if we did not get your questions answered, we will have your account executive reach out to you today to get you your answers. So again, on behalf of everyone at Angel Oak, thank you for your time and we appreciate your business. If you haven't closed a loan with Angel Oak, obviously you can tell by the experts we have in our company, it's time to send us a loan. So have a great afternoon. Appreciate you guys.